These presentations will work a comprehensive bookkeeping problem both within Excel as well as within QuickBooks. Excel having the advantages of being able to see all the components and how all those components fit together to make the end product, that end product, the financial statements. QuickBooks having the advantage of being able to use forms, simple data input, and an automated system in order to convert that simple data input into the end product, the financial statements. We will work each component of the problem in Excel first and then work that same information in QuickBooks. Hello, in this presentation we will record in Excel a deposit from the owner and a deposit from the bank into the business, comparing the activity for our books in Excel to what may happen in software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're going to first look at a quick view of what could be input into a system such as QuickBooks for these transactions. First, we're taking a look at the check register. It's possible for us to enter this transaction through a check register, not needing necessarily debits and credits, but just entering something that looks similar to what we would enter in a checkbook, meaning we would go to the register section, and we would then enter the data that we would have for the deposit. In this case, we're going to say that the owner has a deposit, so we put it just in the deposit section of our checking account check register. And then we would need to assign some other account. So we know that the check register itself means that the cash account is affected, deposits increasing the cash account. And then we just have to name the other account, which is the one item that's a bit more information than we may have in just a written check register for our checking account as we write checks. And that's going to be the other account. In this case, we're putting it into owner's equity. That's how we would put in that deposit if there was a deposit from an owner to the system, to the business. This is how we would put it in, possibly, or one way to put it in to a QuickBooks or some type of accounting system. And then the accounting system would deal with the debits and credits, deal with the whole process of making the financial statements from it and the data related to it, including the general ledger and the trial balance. Then if we took out a loan, same principle, we could go to the check register within accounting software. We could say who we got the loan from. We're going to record a deposit in the deposit section. And then the other side, we need to name some other account. That other account could be loan payable that we are putting this information into. That then is enough information for QuickBooks to record the debits, the credits, to record the general ledger, to record the trial balance, and to generate the financial statements. We will now put that information into Excel and go through that process of generating that information. Here we are on our Excel worksheet. Last time we left off just setting up those beginning balances accounts. We set up the accounts, we put in those beginning balances. Now we're entering transactions. We're going through and we're entering new data from this point in time, new data since the point in time that we just put in those opening balances. So what we're going to do is go through here. We're going to say that that first transaction is going to be a deposit from the owner. The owner is putting more money into the business. We're going to say that this will happen on 1/10. It's going to be the deposit date. Now we know this is going to go into the checking account. The checking account is our cash account and it's an asset account, and asset accounts have normal debit balances. We're going to increase it by doing the same thing to it, in this case another debit. So we will increase the cash account with a debit. I'm going to go ahead and copy the cash or checking account, copy the checking account, and paste that on top, debits going on top in cell B20, right click and paste 1, 2, 3. We're going to say that the deposit is going to be for $65,000 in the debit side, $65,000, no commas needed. We'll select enter. And then we're going to have a credit for that same amount. We're going to put the credit in cell D21 with a negative $65,000 and enter. It'll format that for us. Then we just need the other side. What will the other side be? Well, who put the money in? The owner put the money in. We didn't get that money from customers, in which case it might be revenue or decreasing accounts receivable. But we, the owner, put it in, and therefore we're going to credit the equity, representing the fact that that claim to that money is by the owner. The owner has claim to that money to receive it back or take it back out if they so choose. So in any case, the equity account has a credit balance. We're going to increase it with a credit by doing the same thing to it, which would be another credit. So we will copy the equity section, copy the equity account, and put that on the bottom in cell B21, right-clicking and pasting 1, 2, 3. Then we'll go up to the top, we'll go to the Home tab, we'll go to the Alignment group, and we're going to increase the indenting. Not necessary, don't have to do that in order for this to work, but we're just going to do that for the formatting purposes. Then we'll post this. So here's our last journal entry. It's a debit to the checking account. Scrolling up, we see the checking account here, first account on the trial balance. We are going to post this general journal to the general ledger, which will be in the same order as the trial balance. Therefore, the checking account's our first account. We're going to be in the debit side because we did debit over here. Therefore, we are in cell AM9 equals, and we're just going to point to that debit, that 65,000. Once we select enter, this running balance, 25,000, will go up in the debit direction to the 90,000. That 90,000 there will also be seen here within the checking account. Then we're going to post the other side. That's in the equity section way down here. In order to post that, we will do the freeze frame item. So we're going to go up to the top. In AJ1, we're going to go to the View tab, up top, View tab. We're going to go to the groups in the Windows group, and then go to the Freeze Panes, and we want to freeze panes. Then we're going to go back down. We're going to look for that equity section. It's going to be in order, assets, liabilities, equity, both on the trial balance here, as well as the general ledger there. We're scrolling over to the general ledger. We have all assets in green. We've got the liabilities in orange. We've got the equity accounts here. This is the equity account we are looking for. We're going to have a credit. So there's the credits we want. We are in cell BH17. We want to pull that number over to it. We're going to do that with a formula by selecting equals and then pointing to that 65,000. That's a credit. That's a credit. We'll increase the credit balance in the credit direction to 150,397. Scrolling back over to the trial balance, we'll see that same information, that same number represented here on the trial balance. That will then put us back in balance. Note that this amount in net income, that should be 0, meaning there's nothing in the revenue or expenses at this point. We haven't earned any revenue and we haven't incurred any expenses in the current period that we are working in. If we were to double click on this item, that's what it should be summing up at this point. And then next thing we're going to do is record the second journal entry. I've typed in here the 1/10, same date that we will be working with. And we're going to record a deposit, once again, that deposit from taking out another loan from the bank. So we're going to have a loan from the bank that we will be taking out and looking at the transaction for that. If we think about that, we know that the cash is going to be affected. That's the first thing I would think about, by the way, if we were to think about debits and credits and recording debits and credits. Is cash affected? Is the checking account affected? It's easiest to know whether it is or not than any other account being affected, and it's easiest to know whether it is going up or down. So we have the checking account. We're going to say, yeah, we took out a loan. We're going to get money. And the checking account is here. It has a debit balance. We need to make it to go up because we got more money. So we're going to do the same thing to it, which is another debit. So we're going to copy that amount here. Scrolling back down, we're going to put that in cell B23. Right click and paste 1, 2, 3. Then the amount will be 50,000 in the debit section in cell C23. We're going to credit then in cell D24 something for 50,000. And that then is going to be the fact that we owe money back in terms of a loan payable. We already have a loan payable on the books here, and we're going to increase it by more because we have another loan being taken out. We see that it has a credit balance, and we need to credit it again. We know that because we debited cash, and we also know that the loan payable is a credit balance account. The bad thing is going up, meaning we owe more money. Therefore, in order to make anything go up, we do the same thing to it as its normal balance, and it being a normal credit balance means we need to credit it in order to increase it. So we're going to credit that 22,000 by another 50,000. Right clicking on AJ20 to copy the cell, and then going back over here to B24, right clicking and pasting 123. Then going to indent that by going to the Home tab, going to the Alignment group, and then increasing the indentation. Not totally necessary, but can be useful. If you double click on that cell before the L and indent 3 times, you will in essence have the same effect. Then we're going to post this out. This was journalizing the journal entry in the general journal. Now we're going to post this journal entry to the general ledger, which will then be used to generate the trial balance and the trial balance used to make the financial statements. So here's the cash count. That's what's going to go first. That's our first count, of course, on the trial balance, and therefore too, first account on the general ledger. So we're going to select here in AM10, scroll down a bit. We can see both sides pretty much. There we go. Equals, and we're going to point to that 50,000 in C23. C23, it's right there. And then once we select enter, it should increase this account because we're debiting a debit balance account for 140,000. That same amount found on the trial balance under the checking account. Scrolling back down, we also see the loan payable long term. That's going to be here. It's the last liability account before the equity accounts, and it's in order, of course. The assets and then the liabilities will be in the same order from the trial balance to the general ledger. Therefore, if we go through this general ledger accounts, we're looking for the first orange account. Scrolling through these items, I see orange here. So when assets, liabilities, and orange, we're looking for the last orange account. The last orange account. So here's the last orange account down here in cell BD40. BD40. Going to scroll up a little. That's a little, can't quite see them both. I'm going to make it a little bit smaller. Just there we go. And now we can see possibly the two together, really close. So BD40, and we want that 50,000. So we're going to select equals and point to that 50,000 in cell D24 and enter. Going to make this a bit larger once again. And if you couldn't see that, you could just type in the number, the amount, the placement, which is D24. So you could type in equals D24, but I do highly recommend using those formulas. Note what happened. It went from a credit balance, doing the same thing to it, a credit, increasing in the credit direction. That's not a negative number in terms of going in the hole for us. It's meaning we're increasing in the negative direction because we're talking about debits and credits. Okay, so we're going to scroll back that same 72,000. If we go back to the trial balance, as we will, and scroll up to that loan payable, we see that 72,000 right there. We see we are back in balance down here, and this trial balance then is back in balance. We see that the assets here, if we add all these up, tie out to 238,397. Nice, and it just lets us just calculate that for us within Excel. It's the beauty of it. We can highlight these. These are all credits, but they add up to 88,000. And then we can see that the equities, the only thing in it is that 150,397. If we were to look at our accounting equation, assets are these accounts. They add up to the same amount. We just looked at the 238,397. Liabilities are these accounts adding up to the 88,000, and the equity is the 150, which is of course that account. And the liabilities and equity add up to the assets. If we switch this around and say assets minus liabilities equal equity, we can check that very quickly given the format that we have here in Excel. Just highlighting these in Excel, adding them up here. This plus this plus this plus this plus this minus that because it's a credit, minus the credit, minus the credit. The debits of assets minus the credits of the liabilities, giving us the equity balance of 150,397, 150,397. So it's a good format just to take a look at the format. These then will be used in order to generate the financials. So if I was to, I'm going to unfreeze the panes here. So let's do that first. We'll go to View, and we'll go to the Windows group and unfreeze the panes. So when we go over to the balance sheet We won't be observing the general journal this time. And then we're going to go back up here and just see that that's going to go to the balance sheet. And what else did we work with here? We worked with the loans payable. I remember that. That's going to go to the balance sheet and the equity section. If I'm missing anything, I apologize. And then we're going to scroll over to the financial statements and just note that this is the amount that can be automated. This is what QuickBooks does. We enter the data. QuickBooks just generates the general ledger, generates the trial balance, generates the balance sheet all automatically, and we then just need to interpret what QuickBooks is doing. Here's the cash account, here's the total current assets, there's the property, plant, and equipment, there's the total assets just summing up here. And then we have the liabilities. Here's all the current liabilities. Here is the loan payable, $72,000, total liabilities, and the equity section here. If we add those then up, we get the assets equaling the liabilities and equity. Still nothing on the income statement. We haven't made any sales. We haven't incurred any expenses for this current time period. Statement of equity shows that same equity balance in the beginning balance. Note here that we would have to break this out a little bit in terms of the statement of equity. We would have to break out the amount that is the owner investment. So when we adjust this automation that we have here, the owner invested $65,000. Because we put it into the equity and didn't break it out into a separate account, it's all going here. So if we want to break this out, and note that the QuickBooks doesn't typically, we typically look at the balance sheet and the profit and loss, and the equity section will be included in a statement like QuickBooks oftentimes in the profit and loss section, meaning it'll include the net income kind of in that section. So we're going to have the statement of equity section here, so we could then put this information here by saying 65,000 will be there. And if we want to automate this whole thing, I'm going to say this equals what came from the trial balance. We'll actually build these financials later, by the way, but we'll just see the automation process here. And then I'm going to say this minus whatever amount we're going to put in the owner investment is going to be there, and that should generate the same ending balance. So again, I know that might be a bit confusing right now. We will generate the financial statements and basically build them from the trial balance at a later point. But right now we just want to show the pieces that can be automated as we go through here in terms of creating this information. Once we enter the data into the journal entry, we can basically automate that information, create the general ledger, create the trial balance, and create the balance sheet from that automated process. We will then go back through and put these financial statements together. Hello, in this presentation we will record what is oftentimes one of the first couple transactions that will happen within a new company. We will record these transactions into QuickBooks Pro 2018, those being the record of a deposit from the owner and a deposit from a loan taken out to fund the startup of the business. If you've been working with us, we're going to continue on with the Get Great Guitars problem. If you have not been working with us, that is okay. We can still see how to record the original deposit from an owner and loan into a new business. What we've done so far is we've set up the Get Guitars business. We have a new company file. We put in the beginning balances, the beginning accounts, and the beginning balances within those accounts. Set up a couple vendors, set up a couple customers, and we are now going to actually start recording the transactions. We're going to record all these transactions as of the first date of 2021. So we're starting a date that's not going to be of the current date. That's by design when we work problems such as these. So we've done everything in order to start things up, and now we're actually going to be entering these transactions. This is typically going to be the first type of transaction, oftentimes with a startup type of company. And therefore, we're going to enter the deposits. A couple ways we could enter deposits. We could go to record deposits here. But oftentimes, the first deposit, I like to go to the check register. So we will then go to the check register in order to enter these deposits. That's going to be located in the banking drop-down. And we're going to go down to Use Register, Banking, and then Use Register. And this is going to look familiar. We're going to have a drop down here. It should default to the checking account, whatever your checking account is. If you select the drop down, you can see you have all the accounts, and we can actually open the register for just about any account, if not all accounts. But typically we want to open the check register, oftentimes being the most useful. And I'm going to open that. We're going to say OK. The check register should look familiar in that it looks pretty much like a checkbook, and that's the nice thing about it. And is also the reason why QuickBooks tries to make a lot of the other accounts have a register that looks similar. But when working with the registers, it's usually better or easiest to work within the check register and then record anything to any other account in the other account. So how this is going to work then is we're going to have the date. We're going to put the payee here or the customer, and then we have the payment, and then we have the deposit. We do need to name another account here. So note that that's kind of the thing that's a bit different than possibly a checkbook. We not only need the payee or customer, the reference of who we're paying or getting money from, but also an account that QuickBooks needs to record to. So we're going to make sure that we pick that up. We then have the memo if needed right here. So we're going to go ahead and put this information in here. Now, when we go here, it's going to try to guess what the first check number is. Now, typically, if we have a new checkbook or something, it's probably going to be like 101 or something like that. But we'd have to put the first check number in, and then it would number automatically from that point forward. I'm going to first select the date. We're going to say that the date of this deposit is going to be 01. We're going to put it in 0110. And then 2021, so 01/10/21. We're going to get that from our PDF file, so this is just going to be from the directions on the PDF file. When you select the tab, it'll go to the next item here. Now, because I don't want a check number at all, and this is actually a deposit, I actually delete the check number, and I just usually put a reference as a deposit here. Then the payee, there is no payee. We're the ones going to put the information in. So we could put owner or something like that. I'm actually going to leave it blank at this point. And we want to make sure that we're in the deposit section. So we're on the deposit side, not the payment side. Within the deposit side, we're going to enter $65,000. And that's how much we're going to put in as the owner. Next item, we're going to have the account here. So this is going to be the account. Now the owner is the one putting the money in. So it's not going to, usually when we get we get a deposit, later on it's going to be hopefully revenue from a customer. We cannot put it to an income statement account. We're not going to put it to income or expenses. What we're going to do is put it into some type of equity account, an investment. We may set up another investment account, but typically we just put it into the equity account. Our equity account, if we scroll up, we'll see the type of accounts on the right-hand side. And the equity account we're looking for is going to be that owner equity account. So we're going to actually post it to the owner equity account there. And note, it doesn't record. Now, I'm not going to put we could put a memo, say the owner investment. Note that it's not going to record here until we hit enter or return or select record down here. So if you were to leave right now, it would not have recorded. So I'm going to select enter, and it's going to say, are you sure you want to record it to this equity account? Because that's a bit of a rare type of transaction, doesn't happen all the time. We're going to say, okay, that's what we want to have happened. And then it says it goes, and it's going to click that. Once it goes down to the next line, that's when we know it has been completed. If you got the sound on, then it usually has a little sound too as well, which will indicate that it has been completed. Next, we're going to do a loan. So we're going to do a similar type of transaction for a loan amount. And we're going to say that that's going to happen on the same date. It's also going to be not a check number, so we don't want the one, we want a deposit. And then we're going to put the bank name here. We're going to say Chase is who we're going to receive this loan from, Chase Bank. And we're going to say tab. And it says we're going to have to set something up. This name is not found. We're going to set it up. Now, we're not going to do the full setup. We're going to do a quick setup here. So I'm going to say I want to do a quick add. And then it's going to ask, are we talking about a vendor, an employee, a customer, or other? We're not really talking about a vendor or a customer or employee. So we'll put it into other because we're taking a loan out. Vendor is kind of the closest one, but that would be dealing with people that we buy stuff from, and we're taking a loan here, so not really the same thing. Make sure that we're going over to the deposit, not the payment side. So we are over here within the deposit side, and the loan that we will be taking out is the $50,000. So there's the $50,000 loan. We're going to select tab. Then we need the account, and we may have the loan account set up already. If not, then we would have to set up a new account. I'm going to try to type in loan. So there we have it. It's going to say loan payable. I'm going to say tab. If we had not set that up, then we can type in loan payable, and when we select tab, it'll say we don't have that account. Do you want to set it up? And I would typically set it up as an other current liability account, and then just set up the loan payable account. Just make sure you have the right account type. Then we're going to say we take out a loan. Is going to be, I'll put for the memo here, and then I'm going to say tab. Make sure that it's not going to enter anything until we hit enter or until we hit tab. So I'm going to say tab. And then there we have that information. Now we can check on this and see if it does what we think it should do. What should it do? It should at least increase the checking account on our financial statements in some way. So let's go to our financial statement, the main financial statement, the balance sheet, and go to reports and scroll down. We're going to go to the company financials. We're looking for the balance sheet. So I'm going to scroll over to the right, scroll down to the balance sheet. And there we have it. We're going to change the dates to 12/31/21 this time. I'm going to go to the end of the current year that we're going to be working on. And we see the checking account balance now has a 140. If we want to see the detail within that checking account balance, we can use the zoom in feature. We're going to double click on it to see the zoom in feature. And here is going to be that activity. Note that because the balance sheet is as of a point in time, when we go in and see the detail in the transaction by account, which is kind of like the general ledger account, we only see one day here. And what we really want to see is the entire year. So we're going to select tab and put 01/01/21 and then see the activity that has then happened. And that activity then includes the beginning balance of 25. That's what we had in there before we started this. And then we had the 65,000 here that we just put in place. I'm going to extend the memo, and that's from the owner investment. The other side of it, you can see went split. That means the other account that it is going to is the owner's equity. And then we see the 50,000 in the deposit. The other side it's going to is loan. If we want to see those, then we can close this out. And I'm going to say, no, don't show me that again. And then we're going to say, scroll back down, and we say the loan payable is here. So if we want to see the activity, I can double click on that. And I'm going to change the date again to 01/01/21. And we can see there's the Chase loan, the other side, the checking account. So there's always going to be those two accounts that are impacted when we do these transactions. It's a good idea to go to the financial statements, jump back and forth, and see what's happening, see what QuickBooks is doing. Even if we don't fully understand the debits and credits, we should kind of see how this whole balancing thing works, and that's one way you can get a better understanding of how these things are tying together. I'm going to go ahead and close that out. The last one set up the other side was going to the equity section, so that's going to be here. Let's double click on that. I'm going to change the first date, 01/01/21. And there we have this amount here. That's from the owner investment, increasing the equity section, increasing the net value of the company, increasing the amount owed to the owner of that 65. If we wanted to drill down on this, then we can kind of see the transaction. Note if I double click on these, it doesn't take me to the check register, but to a form, which is what QuickBooks is gonna use to drive their transaction. So even though we're entering this information into the check register, QuickBooks still generates, in this case, a transfer funds form. So I'm going to go ahead and close this back out, So that's the effect on the balance sheet of the deposit from both a loan and the owner deposit within QuickBooks Program 2018.